All right. Good afternoon, folks. I think we're going to start going live here in a bit. It's been a few weeks since our last webinar, so getting some of the technical kinks out, but I see folks starting to join in. Rachel's sitting across from me, kind of monitoring Q&A today. I couldn't convince her enough to come on screen. So just get me today, and we're going to be talking about some of the PPP loan updates and everything that have occurred over the last few weeks. We haven't had a PPP webinar in about, I would say, 2 to 3 weeks, just because some of the additional updates that were coming out too fast, and we were trying to make a decision on when we would share some of our thoughts and the updates with you. And then it got to the point where I was like, okay, enough has passed. We just need to go ahead and put something on the books and keep us accountable to being a resource for you. And that's why we're here today. So I'm going to go ahead and kick it off with our first polling question. Let me jump into that real quick. We'll launch that poll, and then Rachel, let me know if you're good to see that. Okay, awesome. Give you all a few seconds to vote in that poll, and then we'll close it down in a few. So just outside of DILLON CPA's webinars, hopefully y'all have been staying up to date on the PPP loan updates. So just wanted to see where y'all are getting your updates, SBA website, researching on social media, which isn't always the best, listening to the news channels might not always be the best, or you've just been waiting for your friends over at DILLON CPAs to update a new webinar. We're gonna go ahead and close this poll out and share results. All right, so about 50% of you are going to the SBA, which is probably your best bet as far as the amount of updates that are coming out. And we're going to cover about 3 to 4 big updates that have occurred over the last few weeks today. So there's a lot of stuff to cover, but I would agree, SBA, the Treasury, those are probably the main two. Some really good media websites. Forbes is saying on top of this stuff's pretty good, remaining somewhat neutral on their opinions. Journal of Accountancy, if you love your CPAs and just want to talk CPA talk, that's a kind of our love language maybe. So you can go to the Journal of Accountancy and see some kind of technical articles there. But the other folks, really just getting from other sources of media, be careful about where you're getting that. And then we're just here as a resource as well. So kind of kicking it back off today, jumping back in with all that is PPP. And now we have a new one, PPPFA, Flexibility Act. So fun stuff. We're going to go ahead and kick it off and start off by sharing just where we're at today on the program as a whole. And so this is the SBA's numbers. If you go to their website, you'll be able to download, I think it comes out weekly, just where they update kind of the volume of loans, how that PPP money is being spent and where it's going. So as you'll see, this is through June 20th. There's almost 4.7 million in loans. The total number of loans, 515 billion has been kind of accounted for, and that leaves about 120 billion, my last check, as far as still available within the PPP program. Kind of breaking down the different loans and dollar amounts, you'll see there that the average loan size is 110,000. The thing to keep in mind here that we're going to talk about later today as well, notice the percentage of loans that really are 150 and below. The total number of loans that account for 150 and below are 85%, or over 85%. As far as the number of loans, but then the dollar amount of 150,000 or less is actually about 27%, 26.9%. So over 150, that's a very small number of loans, but really captures the bulk of where the dollars went. So that'll come into play here in a bit whenever we look at 150 and below on something else. So stay tuned there. Moving along, you can see that Texas, we're in second place as far as the dollars being counted for in the PPP. We're behind California, just narrowly in front of New York. I don't think anybody else is kind of close to the top three of us. Florida is in there with, kind of in the fourth place, but Texas coming in strong. Again, a majority of the money, which is good. It's being used for keep people on payroll and keep businesses healthy. So moving along, this is also the banks that are responsible for the payout of the PPP loans and where they rank. No surprise there, Chase being the largest bank on PPP, Bank of America number 2, Wells Fargo. Wells Fargo had some issues with kind of getting their hands slapped on opening accounts and all that stuff. So no surprise that they're in the top 5, but not 1, 2, or 3. But this is really surprising as opposed to where PPP started with some of the smaller community banks and credit unions kind of winning that first round. Now that we're full into billions beyond that first round, you kind of see where the dollars are actually being funded, which makes a little more sense now that the bigger banks did have a chance to catch up from that first round. So interesting stuff there. And then this is also the breakdown of where the money went by industry or by whenever you entered into your loan application, they tracked you by your NAICS code. So you'll see that healthcare, social service, and professional services, that takes up about 25% of the dollars being used, with construction, manufacturing, and then kind of a surprise probably to most people is that accommodation and food service. So your hospitality industry and then restaurants would only come in at 8%. So all the fun stuff. This is what I geek out about at night. And so hopefully y'all enjoyed a little bit of that sharing. If you want to stay tuned with that, you don't have to wait for me to share these numbers. You can go out to the SBA's website directly, and it's there. So and for some of y'all that are keeping up to date with SBA, this is by far, you're going straight to the source on this, and continue to do that. If you go to that website there, probably changes daily with a new rule or a new PDF of something coming out. So just continue to go to that SBA website and all the fun that it brings. So, all right, we're going to kind of shift gears and kind of jump into probably where we last spoke as far as a webinar. The PPPFA was passed back on June 5th. And so what that did, that Flexibility Act really expanded what was originally the intent of PPP to be 8 weeks. So whenever this kind of dropped, we saw something coming down the pipe where they were going to allow for a longer covered period to use up the payroll and to use it for certain non-payroll expenses. So this is good that it was passed. It was definitely touted as a win. I think it's a win for most folks that did apply for PPP funds and weren't able to use them or were confused around the original 8-week timeline. And so what FA did, we'll just call it that, really expanded to 24 weeks. And you have to elect into that 24 weeks whenever you fill out your forgiveness application, or really beyond your 8-week period. We'll talk about that in a little bit too. And if you applied after June 5th, you're automatically in that 24-week period. So because this passed on June 5th, anything moving forward on a new borrower application is immediately to the 24 weeks. And then the other piece that was really important was how much of the percentage of your funds that you receive were being able to use for non-payroll costs. So you'll see there that the FA actually dropped that from a 75% amount for payroll only to a 60% amount. And what that does, it just allows you to use your funds for the interest, the rental, utilities, all that fun stuff that are part of those qualified expenses that are non-payroll. And the 60-40 split now, what we've been telling clients is still use the majority of the PPP funds for payroll, because you do have other parts of that forgiveness calculation that are around headcount, FTE equivalents, full-time equivalents, and that could impact how much forgiveness you receive at the end of the day. So still focus on payroll as the primary goal, obviously with a 60% amount in mind. And one thing that is kind of still up in the air, they've come out and clarified that under this FA at first, it was you had to use 60% at least, or none was going to be forgiven. And that was kind of a mistake in the writing of the FA. And so they've actually come out and clarified that you can still receive partial forgiveness if you don't meet that 60% mark, if you just don't have enough time to use up over the 24 weeks and you still can't hit 60% of payroll for whatever reason, you still could receive some partial forgiveness. So the 60%, the way it was written originally, was a cliff. You had to go 60% or nothing was going to be received as far as forgiveness, but they have come out and clarified that that was not their intent, and they'll probably push out a new IFR clarification to change that. So the other big piece was expanding the 2-year term to a 5-year term. So all June 5th loans and after will be 5 years automatically. You have to, if you applied prior to June 5th, then you have to actually work with your lender and be approved to take your loan from 2 years to 5 years. And so that would be on anything that's not forgiven. And that original 2-year term is what you agreed upon whenever you signed all of those loan documents. So it would just be a modification to the loan. So your bank has to sign off on that. It's not going to be automatic. So if you are going to have a loan after this, maybe go buy your banker some donuts or take him for a drink, and hopefully he can do that from 2 to 5 years for you. So that's the PPPFA kind of that was passed on June 5th, and a lot's happened since June 5th. So this is kind of our second update, what we're going to talk about today. It's the new loan applications that had to be released to go along with the FA piece, the FA law that was passed. So those applications dropped on June 16th, 2020. And so the application that we already seen before and kind of spoke into in a previous webinar was just your typical application. I think it was around 11 pages with instructions, pretty in-depth, has worksheets that you have to you start with a worksheet and then go to a schedule and then a schedule to the actual application. So that'll be a fun one to fill out. The FTE detail that you'll go into will be pretty intense. And so if you don't feel comfortable doing that yourself, obviously you can enroll the services of somebody like us, or your payroll company should be able to help you quite a bit with that as well. So, but the modifications to that loan application, we did learn some things in that. And so one of those is health insurance costs for S corporation owners are not going to be allowed in addition to wages and in addition to retirement plan expenses. And the reason why is because as an S corporation owner, W-2 employee, your healthcare isn't or should be included in your W-2 wages. So part of that is, just a technical kind of correction as far as how things maybe were presented when you applied for the loan. So if you applied and then added your healthcare on top of it, you may have gotten a little bit larger of a loan that you can use on other employees or other expenses. So they did clarify that as part of this second application for just the main application. So the other thing is that the safe harbors, the reductions there can be applied as of the loan application forgiveness date. And so you have a few dates. June 30th, that's been kind of circling around. That was when we had the first 8 weeks. Now December 31st trumps that safe harbor as far as the June 30th was concerned, because the 24 weeks now passes through June 30th as a safe harbor. So, and then borrowers that receive loans before June 5th can obviously choose between the 2 8-week periods. So they did the 8-week or the 24-week. So they did have to clarify that in the application, just because the law was passed after the original application was dropped. So, and if you want to review and kind of dig into those applications, they are available on the SBA website. Many of you have received emails or phone calls from your banker saying, hey, we're working on the application, or here's the PDF of the SBA application. I'm not sure, you might want to ping Rachel. I'm not sure that any bank has actually in their online portal has set up an option to actually start filling out that application. I would think that that's going to be happening soon, but we haven't seen that yet. So if you've seen something, it would be interesting to note. I would assume those top banks that we saw earlier with JP Morgan, Bank of America, they're the ones that are going to process most of the loan applications. So they're going to create some type of computer widget or online form in your login to do that and feed into some type of yes or no application. So, but that's that. And so we'll go to the second part that dropped with the forgiveness applications, and that's this new EZ form. Easy makes it sound easy, but I would caution you that it doesn't appear that way. It's better than the other application, but it's still not easy like you would think. The highlights of that are, if you are self-employed and have no employees, it should be a very streamlined process for you to apply for forgiveness. That using that EZ form, it's almost an automatic forgiveness based on your 2019 income that's going to be reported on your tax return. So that's what you applied with. And so if you're a sole proprietor, Schedule C, have no other employees, then it's going to be very easy to apply for forgiveness. And I almost hate to say this, but it would probably be guaranteed or 100%. You definitely want to check with your banker on that. But that easy is for those folks who would be in that scenario, no employees, you applied on, that base amount. And so just going from there. And then the other people that can use EZ, which we're hoping most of our clients can use EZ, just because it's going to cut down on a lot of the stress and paperwork for both you, us, and your banker to ultimately process. You did not reduce the salaries or wages of your employees more than 25%, and did not reduce the number of hours of your employees, or you experienced reductions in business activity as related to health directives. So you saw where certain people were mandated to close, or certain people were mandated to operate at a certain percentage. All of that would qualify in that third round. What you'll have to produce whenever you apply for EZ is some type of certification, much like you did on the loan application. You'll have to certify that you were impacted. I think at that point, then your banker could request additional documentation, whether you were shut down by, the county, state, CDC, OSHA. There's a list of different things that are in the application instructions and in the guidance from SBA, but that's really where we're hoping that a lot of folks will be able to apply for this EZ application.
See the question.
Yeah, let's take a break real quick, and Rachel's got a question for me. Oh, yeah, let me tell you, we'll have to learn how to do webinars all over again. And okay, I'm gonna answer this quick question for you. Can a company apply for additional PPP funds if they already received some PPP funds after the new extension of use to 24 weeks? The answer there is no. So under the current PPP, which actually ends June 30th. So if for some reason you haven't gone out and applied and you feel like you could go apply, and now you've got a majority of the rules to know what you're applying for, you need to do that before June 30th. So you've got a few days to do that, but I would probably, as soon as you log off here, go apply for that. But to request additional funds, that is not available at this point. If there was an error in your application, you could potentially ask your banker what remedy they have. I've seen where early on, some of the partnerships with general partners and guaranteed payments, they weren't handled correctly by the banks. And so they were able to go back and kind of reapply for additional funds, but it would still be based on that 8 weeks, that 2.5 months of payroll. So, yeah, there may be additional stimulus around some type of loan program. Depending on who you talk to, probably in politics, some folks would consider PPP a win. Some people may consider it a loser. So I think that's where you really need to kind of look at what other options you have after this point. And we'll talk about a few here in a little bit. All right, so those were the kind of the two forgiveness new applications that we're seeing now and kind of getting into and having fun with, getting familiar with, and we'll talk a little bit more about that. As far as, in addition to like the acronym PPP, the other one that's kind of floating around my head these days, IFR. So interim final rule, and if you go to SBA or Treasury and look up the actual, when these IFRs come out, the legal name or it's as confusing as all get out, because it's like IFR to the previous rule, and it just keeps going on and on. So it's just, they're making up the rules as they go. They don't want to say it that way. So it's just, there's an interim final rule until the next rule comes out. So this is the one that was published on June 19th. Whenever FA passed, then you kick off the 8 weeks to 24 weeks. So then you've got folks that say, hey, can I go apply for more money because now I can pay my folks over 24 weeks as opposed to 8? And they said no. But if you need more time to pay your folks out what you originally applied for, here's how you do it. So the 8-week covered period, which is what we've known the whole time. So non-employee compensation max, or not non-owner, I'm sorry, that's an error on my part. So non-owner employee compensation would be 15,385 maximum. And that's going to be 100,000 divided by 52 weeks times 8 weeks. That's under the 8-week covered period, which would also be your alternative covered period if you're a biweekly or more frequent, maybe a weekly tax payroll provider, payer. So, but yeah, so any employee in the 8-week covered period, including owner pay, would be the maximum of 15,385. You see on owners, that's going to be the lesser of 15,385 or your 2019 compensation. So what you paid yourself on a W-2 or as a guaranteed payment if you're a partner for 2019, you're going to be limited to that amount over that same 100,000 divided by 52 divided by 8. So no more than 15,385 on that 8 weeks. And really that's to kind of combat the strategy of, hey, I only paid myself a salary of 60,000 last year as an owner, but now I've got all these funds. I don't have the employees anymore. So I'm just going to bump myself to make $100,000, pay myself the 15,385. SBA obviously said, no, that's not cool. We're only going to limit you to, in that sense, the $60,000 divided by 52 times 8 versus the 15,385. So the second one is where it gets even more interesting. So non-owner employee compensation, and I'll fix those slides if anybody wants the slides after this. The non-owner compensation is going to be 100,000 divided by 52 weeks times your 24-week covered period. So the maximum is 46,154 for any one employee as approved payroll cost for the forgiveness. But for owners, it's the lesser of 20,833. And this does not include a retirement plan. And then it may not include healthcare unless you're a W-2 S corporation owner. So 20,833, the way that we arrive at that is a little bit different of a calculation. It's 100,000 divided by 12 months times 2.5. And you get extra special brownie points if you remember that calculation. That was actually the same one that you used when you applied for the loan. So The $20,833 max was the amount that any one owner could apply for based on themselves. And so that's coming back into play. And you'll see there, if you're an owner, you're still limited to that 2019 compensation divided by 12 times 2.5 months. So this is where it gets interesting. The term here is windfall provision. They do not want business owners who pay themselves compensation through W-2 distribution as guaranteed payment, or just as sole proprietor draws or something. They don't want you to come into a windfall because I got all this money, laid off folks, or didn't bring them back, reduced hours, and now I can use more than I originally applied for myself. And so that windfall provision was somewhat built into the 8-week one, where you were capped out at the 2019 compensation divided by 52 times 8. And it's definitely built into the 24-week. So that's kind of the pieces that we learned on the IFR that dropped June 19th. And by the way, those IFRs come out Friday afternoon. So it's good weekend reading if you don't have a life. But those are coming out at the worst possible time of the week. So Friday afternoons, look for something, or at the end of the day, because they dropped a new IFR on Monday. So they just couldn't get it in all, I guess, on the one on Friday. And they just wanted to make Father's Day weekend that much more special for us. So the other things that we learned on the one that dropped on the 19th is a little just more confirmation. So it really talks into the IFR kind of, it puts legs to maybe some of the stuff that was in the application that maybe wasn't the application for forgiveness, that wasn't spoken into in law anywhere else, and kind of helps define things. The SBA also will produce FAQs. We haven't seen FAQs come out. It's probably been 4 weeks, 5 weeks since this last one dropped. And most of those FAQs were related to the borrower application. Maybe they'll do another set of FAQs for the forgiveness application. But yeah, the last we looked, FAQs have not been updated for a bit. So, but what this last second to last IFR did was it actually just kind of confirmed a few things, and we put those there. So it's the 5 years election with your lender on the loan piece, the PPP lending 60% to 75 on payroll cost, and then that June 30th is still the last day to apply for a PPP loan. So that was IFR that dropped on Friday before Father's Day weekend, and then we come back to the office Monday, or some of us did, and we come back to the office on Monday, and there's a new one waiting for us that night. So when we get in Tuesday morning, and they just don't want you to have a life, or us to have a life at all. So what this does is it actually kind of talks into what support is going to be necessary whenever you apply for forgiveness. And really, these IFRs are good. They just frame out a lot of what the experts are thinking, and kind of, which is good. It gives us a little more clarity. So I'm not knocking the IFR. It's just, if we could figure them all out and drop them all at once so we could dig in and maybe not do a few for a little bit, that'd be great. So, but this one kind of talks into how the lenders will start to comb through applications and what they'll be looking for. And then that also it's the borrower's responsibility, to make sure that all the calculations are correct. No matter who helped you kind of put it all together, you're the one that clicks submit. I know that even the folks that we're helping out with these applications for forgiveness, there's a certain line where we can't cross, so to speak. We can help coach and help plan with the client, but we cannot submit that application. My professional liability insurance would not love that. So all of that falls on the borrower, similar to how the borrower made certain certifications whenever they took the loan, whenever you filled out the original paperwork. So same thing on the forgiveness piece. You will attest to certain certifications in that sense, that you were impacted, or that your FTE numbers are correct, or that your FTE safe harbor amount, that piece that's coming back in that you did try to offer an employee their job back and they denied. You're going to attest to all that stuff, but anything you attest to, you better have support to back it up, because SBA can still come audit you. They can still kind of look at and go into this stuff pretty in depth to make sure that you were following the rules of the program and that you truly do meet the qualifications for forgiveness. So a few things, I love to see people taking risks in business on this stuff. It's kind of amusing to me. Coming out of Texas this week, I saw where a guy in Murphy, Texas, I don't really know where that's at. I think in East Texas somewhere. He had a weddings business, had 126 employees, and he qualified for a pretty large amount. I think it was in the millions of PPP loans, and got his money. Bad news was the business had been shut down since 2018, so he didn't have those employees anymore. He went out, took $60,000 to go buy a Tesla. So he's environmentally friendly guy, which is awesome. And then he took $500,000 and dropped it in his personal E-Trade account. So he was going to go do some day trading, maybe make the government some money, pay him a little bit of interest is probably the hope. But he got arrested this week for bank fraud, I'm sure, because he certified some things like he had employees, but he didn't. So I'm not sure if the banker turned him in or how that works. But it seems like they are cracking down on some of these folks pretty quick, which is good. It helps kind of get money back into the system that shouldn't be there. So I don't know if they recovered the $500,000 or if he went on a crazy whim and lost it all. So, but that's the IFR that dropped on June 22nd. The other piece of that is that, and this was really important, we got a lot of questions around it, is what if I need more than 8 weeks, but not the full 24? That's a great question. The way that this is now coming out, and there's been articles that came out yesterday and today, they keep coming out, is you do not have to wait until the end of your covered period, the new 24 weeks, to actually apply for forgiveness. So once you run out of money, once you've done your calculations and you're solid, you've got it all pinned down, you don't have to wait your whole 24 weeks if your banker is accepting forgiveness applications, which is, that's a conversation with the banker. So just know that that is the case. And the strategy there is, maybe I plan to lay some folks off or drop headcount, beyond 24 weeks or any, after the covered period, but I've used all my money and I've kept people on payroll now. So everything that we're seeing, guidance coming out, especially this IFR, is you do not have to wait to the 24-week end period to begin that loan forgiveness application. And I know that my team that's probably watching this, and they're probably like, "Oh crap! Here come the questions. Here come let's get ready for these applications. Get them into the banker." You do have to check with your bank. So as soon as your bank is available to drop and can take your loan forgiveness application, then that's when it starts. So after you've run out of money and you know that, hey, I'm pretty sure that most of this qualifies for forgiveness, then make sure that you're in conversations with your bank about what that process looks like. So just know that you do not have to wait until the end of your covered period to do so. So this is probably a natural break. Rachel, is there any other questions out there that I kind of can talk into real quick?
There is a question that we can answer regarding safe harbor.
Okay.
Yeah.
The question is, I'm having trouble understanding the scope of the safe harbor. If I hire enough people to get me to the FTE level on February 15th, 2020 in December, so when the last day of December rolls around, do I reach safe harbor? Can I let those people go in January 2021? So that was talking about, that question's coming in June 30th was that original safe harbor date. I intend to restore my FTE count to what it was in those original periods. They've now pushed that to December 31st with the FA Act passing. Kind of this answer to that, this IFR, you do not have to wait until then. So if you apply now, and this is also spoken in the IFR, and if you go pull the actual IFR, there's an example. If you reduce your FTE, you actually have to take that into consideration when you apply for forgiveness, even if you apply for it early. So you're actually, like it says there, you're forfeiting the safe harbor provision if you reduced headcount, if you reduced FTE, your wages beyond that 25%, if you were to apply early. So in this scenario, you do not have to wait all the way to December 31st. You can, but if you've used all the money and you think that you're good, you can go ahead and apply now. And then after you've applied and been granted forgiveness, you could lay everybody off at that point, I think, so just some strategy there to talk with folks that are decision makers in that. And so hopefully that answered that question, Rachel. So, and we're gonna have plenty of time at the end of this for questions. We're kind of cruising along pretty quick, even though we're covering a lot. So jumping back in, so this is the other piece. We knew this was going to get political. We knew this was coming down the pipe, and I told you to remember that 150 amount. So the SBA did announce their enhanced transparency program. So if you apply for a PPP loan and your loan was over 150,000, just know that your name, address, NAICS code, zip code, business type, demographic data, nonprofit information, job support, and loan amount will be disclosed publicly in a searchable database. So, you do business, you bring the government in as a partner or a lender, you have to be prepared for some of this stuff. And this was a very hot button political topic because both sides of the aisle, Democrat and Republican, were known to have applied for PPP. Some of those guys are millionaires, billionaires. So, especially in the election year, but they did come together in a joint effort to make this a little more transparent. And do notice that it's only for loans above 150,000. So like we said earlier, those loans above 150,000, really the number of total loans, it's going to be less than 20%. I think it was around 15 to 16%, if memory serves me correct. But the dollar amount, as far as the PPP funds in those loans, accounts for 73%. And I've got my calculator over here, that's why I'm looking. So 73% of the dollars, but only about 15 to 16% of the actual number of loans. So if you're below 150, what happens there is the totals will be released and aggregated by zip code, industry, business type, and various other demographics, but they're not going to release your name, your NAICS code, or anything like that. So, I know that this may come as a surprise to some folks, hopefully not. You did take a loan with the government kind of as your bank. So that is just the catch in this situation. So we're going to ask our next polling question, and it's related to that. So let me go ahead and launch that. All right, I'm going to stop sharing. Did I stop sharing those results ever? Or leave them up? So, all right, we're going to launch this next poll question. Did I do the wrong one? I'm telling you, folks. I need to get my webinar skills back. So let me see if I can do that. You don't see that, right, Rachel?
I see it.
The transparency one?
But it's maybe not the right question.
Yeah, okay. We'll go ahead and, Zoom is not playing fun, and maybe you can comment, send Rachel a nice little 1, 2, or 3. So transparency poll, will you seek out, search for a specific business to see if they receive PPP funds or the amount of PPP funds that were received as a part of this? So 1, I can pull up the answer even though y'all don't see them. Yeah, I think we didn't do that. So I will search for the info provided on my own business. I think the question's out there, but it was just numbered wrong. So let's go ahead and do this. I will search for the info provided on my own business only. There are a few businesses that I would be curious to know about, including my own, or who cares, not interested. So, people, if you have an employee and you laid them off, maybe they're curious to say, hey, did you get PPP loans? They have no recourse, other than to know. Maybe you want to look up a customer or a vendor a customer who's short paying you, and just maybe you value the relationship that much more or that much less because they got some money and they didn't pay rent. I don't know, so we're going to go ahead and close those polls. And, not surprising, who cares, not interested. So mainly is winning out, majority here. Some folks, if you're just curious, if you're kind of like, want to snoop around and feel a little bit out of folks, that might be a little bit of fun for you. But just know that there will be a database on the SBA website, I would assume, where you can go and see who did take PPP funds. So, all right, we're gonna stop sharing those results and jump back in to where we were. So, all right, so that was PPP stuff. Hopefully I didn't miss an update that came out today. That's just where we are today. EIDL, I wanted to give a quick update there. EIDL did open back up for all businesses. For a while there, they were agriculturally only businesses that could apply for EIDL grants or loans. So just know that you can go to the SBA website and apply for an EIDL grant or advance, and potentially a loan if you haven't done so already. They are currently limited to $150,000 per entity, but they are out there. And the initial grants, so this is very important. If you do ultimately receive one of those EIDL grants, advances, they do come into play whenever you go to apply for your PPP loan forgiveness. If you look at the forgiveness application, it will ask how much you did receive. And if you're following along at home, you remember that it was $1,000 per W-2 employee up to $10,000 max. And so just know that that will reduce your overall loan forgiveness of the PPP program. The rates on those terms are 30-year rate and 3.75 interest on those EIDL loans. So they opened those back up, which is good. They were, I guess, worried that money was going to run out, but we're not there anymore. So talking, no change here, but definitely want to kind of talk into this as well. So whatever you receive as far as forgiveness on your PPP loan, it's not taxable income, but the flip side of that is the expenses that you used are not tax deductible. So you can't double dip. Let's say you got a $100,000 PPP loan, used it all on payroll. You can't deduct the $100,000 that you took the loan out for. So in that scenario, we had a previous example that we went over before. In that scenario, the $100,000 would kind of be added back in as non-deductible expenses, and your tax would go up by the effective tax rate that you're in. So this is consistent with previous IRS rulings and law. There are some senators that are pushing to get this where you can double dip, which we've never done before. We've never seen that. But you actually could take the expenses that you received the forgiven loan on and paid for. That would be awesome, but it's just that's never happened before, and that would have to pass. The way to think about this is, let's say you received $100,000, used it on forgivable expenses. Would you some folks are complaining, now I have to pay tax on this. The thing to think about is, if someone gave you $100,000, but you had to pay $37,000 in tax, you're still net $63,000. You're going to complain about that. But what if someone just gave you $63,000 and there was no tax? Sure, it's a lesser amount than the 100 net of tax, but it's the same. So the one caveat to consider though is, do you have the appropriate amount of tax dollars or withholding set aside whenever this forgiveness does come into play and you cannot deduct those expenses? So our team, obviously with May closing out, and July 15th being the due date for Q1 and Q2 distributions. At this point, people are still recovering from the closures, and profitability for 2020 is nowhere near maybe what they had planned on it to be or what it had been in the past. So we've, for most of our all-inclusive clients, obviously calculated out what Q1, Q2 estimated tax payments should be. If they're in line with where we thought they were going to be, and we can just pay 110% of prior year tax, or if we need to kind of make a shift and pay a lesser amount based on actual. There will be a true up throughout the year if whenever you are deemed forgiveness on those, that you will have to factor that in. As far as I did have these expenses on the books, these wages, these rent payments as expenses, but now all of a sudden I've got this forgiven line item now on my P&L that kind of I have to account for. And so even though the income is not taxable per the law, the expenses are not deductible. So I just kind of want to make sure that we all are in agreement on that. People love to kill the messenger, and I love my team, and I do not want to see any of them really be hung out there for a PPP conversation. So a lot of time on our part is going to be necessary to make sure that people are fully educated. And so that's that piece. So here's where we're at. June 24th, probably have about 10 more IFRs before the end of the month. Who knows? 8 weeks versus 24 weeks. These are just my suggestions. There's probably no disclaimer at the bottom of this. If you haven't used up all of your PPP funds on approved expenses, whether it was based on the 75-25 split or the 60-40 split now, if you haven't used all of those up within the first 8 weeks, then yes, by all means, take a little bit longer, go up to 24 weeks. You will not need to go the full 24 weeks, more than likely, unless you're just so impacted and you're at, you're just not have anybody on payroll, they're still on unemployment. So definitely take as much time as you need to get in the expenses that are necessary to achieve full forgiveness, and then apply for forgiveness. So the easy application versus full application, definitely use the easy. Hopefully that is going to be the route that most folks take. If you do need to fill out the full application, just know that that's going to be a bear because the FTE worksheets and schedules and everything like that, that's going to be quite an intense process. Hopefully between your team of payroll, banker, and CPA, who, if that's us, hopefully you can get that knocked out and pretty good. But that's kind of my thoughts on easy. Swing that way if you can. Applying early versus waiting, definitely if you've used the funds and you've kind of gone through a scenario, a quick calculation, and it looks like most are forgiven, then definitely you don't have to wait until after the 24 weeks. They did clarify and said, if you have not applied for forgiveness, if you've gone through your 24 weeks and the bank hasn't heard from you, apply for forgiveness within 10 months of the end of your covered period, then immediately it turns into a loan and your deferment phase ends and you're now going to start paying principal and interest. So that 10 months has been thrown out. Just know that it's not, you don't have to wait until December 31st unless you really are looking to do a safe harbor, bringing back FTE headcount, and you're just not going to be there until December 31st to buy yourself some more time. But if you can apply early before your 24 weeks ends and your bank's ready to accept your application for forgiveness, that's what we would recommend. Our team's gotten a lot of questions about, I've used all the funds, now I have this extra bank account, what do I do with it? You can close it down. I think once you've kind of let everything clear out of that account and it's down to zero, I don't want you to incur any bank fees for having that additional account. If that's the case, it just doesn't make sense to leave it open. You may talk to your banker about that too, to see what they suggest. But I would go ahead and, you've got all the transactions, you've got the statements. You will want to make sure that if you don't have online access to any other bank accounts, you don't want to shut that bank account down and then lose online access. So that's really a conversation with your banker. I think most folks are closing those down if they do have fees coming in, but just make sure that that's a conversation that you need to have with your banker about that fund balance being zero. Now, what do I do? The 60-40 split, that is, so QBID, qualified business income deduction, that is a tax strategy that we've kind of thrown around and considered here within DILLON CPAs and then the consulting groups that we're a part of. That is definitely something to talk to your tax accountant about, your CPA. The 60%, to maximize QBID, you will want a portion of it to be rental, interest, utilities. If you have 100% as far as your payroll forgiveness, then you may be limiting yourself on QBID deduction on your tax return whenever that comes into play. And so, you know, just kind of put that in there because that's a talking point for us with our clients. If we can not have a kind of perfect scenario where it is 60-40 on that. And then just that, be paying attention to the SBA and Treasury and IRS websites. You know, I think there's still a lot of political nonsense going on. You see that with the, it's an election year. Obviously, you see that with the transparency that kind of came out and the searchable database for zip codes and businesses and things like that. So just be aware that additional guidance will come out on all of this stuff, maybe even another easy application, who knows? But we'll see. I think the banking lobbyists are still pushing for a certain limitation. I think 150 keeps coming back up in a lot of places you see. And so it would not surprise me if a banking lobbyist got passed on some bill to say any loan below 150 is going through such a streamlined process. Maybe it immediately qualifies for the easy application, no matter what the other 2 points are. That's just me speculating. It's not anything, but I have seen where certain banking lobbyists are pushing for something like that, because if you think about it, that takes care of 86% of the loan forgiveness applications that would have to be processed by the banks. And so that's huge. I think the banks they were working overtime on the application part. They're going to be working overtime again on the forgiveness part. So be looking for changes or opportunities there as far as the banks are concerned. And then IRS, you know, that's still, is it going to be tax deductible or not like it currently is? And we'll just see. We'll get additional guidance. So I'm going to launch our last poll.
Before you do that,
Yep.
questions.
Yeah. Let me do questions just in the Q&A.
Yeah.
Okay. If an employee has many hours of vacation, is on furlough with unemployment, can we pay these vacation hours during furlough? We at the end of the year pay out any unused vacation hours. So yes, you can pay out vacation hours. They can qualify for PPP approved expenses. Any PTO would qualify, other than the PTO that's part of the Families First FFCRA, Families First Corona Relief Act, I think. So because that's treated differently, you get a payroll tax credit on those hours. But if you do have unused vacation, you can pay those out now. If they're on unemployment, though, it may impact their weekly benefit amount that they're receiving on unemployment. Talking about unemployment, the benefits do end pretty soon here. The additional $600 federal benefit that ends. So just know that maybe some folks will be looking for work soon. But yeah, you can pay out vacation, no problem. Our loan proceeds were received in May 2020 to extend beyond the 8 weeks. Do we need to contact the bank ahead of time for permission, or will that be covered on the loan forgiveness application? It will be, you will choose that on the loan forgiveness application. So your banker may have a system where they reach out to you automatically and say, hey, it looks like you're about done. You're 8 weeks out from when we drop the money in your account. Let's go apply. That's just having a good relationship with your bank and your banker to make sure that that they know that you are allowed for that 24 weeks. I assume that the banks are also going to just, you know, go with 24 weeks. If they don't hear from you within a few weeks after that 24 weeks, maybe they will have a system of another way to reach out to you. So, all right. We're going to launch our last polling question here and kind of go for any additional Q&A that we've got today. Let's go ahead and launch that poll. So did you find the information in this webinar valuable? So just, that's feedback that we're looking for here. Participate DCPA webinars just because I trust you guys. Find it challenging to apply. That's probably where we need to set up a separate consultation. If you didn't learn anything new, I'm sorry. And then last, if you just like watching me on camera, you're probably related to me in some form, or I maybe sign your paycheck, but other than that. So we'll give it a few more seconds to see, but it is good to get the feedback because we do go through a lot to kind of put these on, and we took a break, really felt guilty, so had to hold ourselves accountable to get back on the calendar to do this one. So it looks like we'll go ahead and share the results, but 100% of y'all are saying yes, that you trust us as the source and the information is easy to apply. So we couldn't ask for anything more. We appreciate all of you that are on this webinar and that see us in that sense. Kind of wrapping up, we'll move along, but then we'll kind of leave it for any last minute questions that come up. So the best way to keep up to date with all this stuff, if you don't want to go to the Treasury website and filter through it, is by our website and our red banner across the top, where it does link to all of the fun stuff that is being loaded on that website and talks through PPP, CARES Act, FMLA, all that fun stuff. So if you click down on those arrows, a lot more stuff will populate. It's so much that we had to kind of get it into a format that was easy to corral. And then the other thing is, if you need to reach out, if you want a copy of these slides or anything like that after I update them for my mistake, just let us know. You can email us at coach@dilloncpas.com. And then kind of what we always end with are, I think based on the poll, a lot of folks are going to SBA and direct, the Department of Treasury direct. Definitely at this point, if you're close to being used up on the forgiveness piece, you need to be having a conversation with your banker, at least kind of knowing where they're at on their forgiveness application, when it's going to be available. We saw a smaller bank up in Brenham, Belleville area where they actually scheduled in person, which is crazy with COVID. Like, that's just a lot to deal with, scheduling people to come in office. Scheduling conversations with folks to kind of go through calculations and get them, kind of walk them through. Love that customer service. Not every bank's going to be able to do that, but definitely talk to your banker. If you've got HR questions around offering employment to folks, you definitely want to make sure that's in writing to bring folks back off of unemployment. If they deny it, then you can opt into one of those FTE exclusions. But you definitely want to make sure that you follow protocol there. That's where you rely on your HR resource. And then we on the other side of this, we see that some employers don't handle these employment conversations appropriately, and you may need a legal team to help you go through that. We've seen that with some other businesses already, lawsuits kind of coming out. And so just protect yourself, surround yourself with a team that you know and trust. And we're very thankful that you think of Dillon CPAs that way. And feel free to reach out to any of our teammates here that you deal with on a routine basis. If they don't have the answer, then they kind of know how to find it. They're very smart people. Very fortunate to have them here. Rachel, is there anything else? Looks like you've handled a lot of the questions. So, but yeah, reach out if y'all got anything else. If you want to copy the slides, we're here for you. Other than that, we're going to go ahead and sign off for today. Y'all be well, stay healthy, wear your mask if you're in one of those areas, I guess. But we'll talk to you soon. Thanks.
Sorry about the phone.